Hey guys, it's James and today we are back with video 23 in the series. Today we are looking at SPHD. We're going to see how much SPHD we need to own to hit $1,000 a month. What we do in this series is we analyze the ETF, or we take one of the ETFs in the list, head over to their webpage, try to determine what they are doing to pay us a dividend yield, look a little deeper into the ETF over on Seeking Alpha, check out the daily yield chart, and also a few other things on Seeking Alpha to try to determine a good dividend yield number. Bring that over to our compound interest calculator right here, punch in that dividend yield number, and it will calculate how much SPHD we need to own to hit $1,000 a month in dividends. But more on that later. And then we round out the video, compare today's ETF to an S&P 500 index ETF. So let's get started. SPHD. SPHD is Invesco's S&P 500 high dividend, low volatility ETF. So what does that mean? Well, the product details listed right here. It's based on the S&P 500 low volatility high dividend index. The fund will invest at least 90% of its total assets in common stocks that comprise the index. Standard & Poor's compiles, maintains, and calculates the index, which is composed of 50 securities traded on the S&P 500 index that historically have provided high dividend yields. We'll take a closer look at this. What do they mean by high dividend yields, or what do they classify that as? And low volatility. The fund and the index are rebalanced and reconstituted semi-annually, January and July. So if there's certain stocks or securities that start to pay a higher dividend than their current 50 listed securities and are producing low volatility, then they will every 6 months in either January or July remove some securities and take some away and put some in the fund. Jumping over to Seeking Alpha, SPHD on their holdings tabs. So what is actually in the ETF? So as we saw on the fund's webpage, if you take a peek right here, 51 holdings, and it looks like they are holding some cash, very little bit. 50 holdings, most all stocks, and then that one extra holding is most likely their cash. So they are holding 20% utilities, almost 20% real estate, 12% consumer defense, and then they are holding all 11 sectors. So here is the top 10 holdings in this ETF. Altria, Kinder Morgan. Well, the top 5 would be Altria, Kinder Morgan, AT&T, Vornado Realty Trust, and Iron Mountain. So they claim that they are high dividend securities. So let's take a look at the top 5 holdings. So that will account for about 15% of the fund. What type of yields are these top 5 securities giving us? 8.69% currently. And Kinder Morgan, 6.41%. Take a look at the 1-year history. It looks like it has done fairly well for the current market sentiment. Go back to Altria, take a look at the year snapshot. Looks like it's been down around 11% this year and down a total of 30% over the past 5 years. AT&T, 6.833% dividend yield, and it's been down 20% this year. Vornado Realty Trust, 8.48%. Over the past year, it's been down almost 50%. Iron Mountain, over the past year, it is actually up 7% and 5% annual dividend yield. So you can see in the historical charts, the top 10 funds, there are some up and some down, but mostly it's been down for the top 5 funds, and the annual dividend yields are hovering between 5 and 8%. Which is considered a high dividend security. Let's come over to see what the ETF is actually paying us. So if the overall ETF dividend yield is around 4%, and from the top 5 holdings, we saw that their yields were anywhere from 5 to 8%, it looks like the remainder of the 45 holdings for this ETF would eventually pull this ETF overall dividend yield down. So let's take a look at the dividend history, see what the payouts have been, and if they are fairly consistent. You can see it was down a little bit in the summer of last year, but for the month or for the year of 2022, it has been pretty solid across the board, around 14 cents on a monthly basis. So let's come over to our compound interest calculator, and you saw it was sitting around 4%. So let's go ahead and put in SPHD, Invesco's S&P 500 high dividend, low volatility. Let's put in 4%. We'll delete the expense ratio, but if you would like to play around with the growth and contribution numbers, put in an expense ratio. The portfolio values over the course of 10 years will calculate, and the income you could expect to receive will calculate as well. But we are looking at the dividends per month. You would need around 300,000 of SPHD to hit $1,000 a month, and 1.5 million of SPHD to hit $5,000 a month. So let's see how SPHD has performed against an S&P 500 index fund. So here we go. Let's take it back all the way to the inception date of the newest fund. Come down here, and it looks like October of 2012 was the inception date of the newest fund. And if you were to add $500,000 in both SPHD and SPY with dividends reinvested, SPY would have outperformed SPHD with a growth of about 6% per year for SPY or 6% per year for SPHD over the last 8 years, and the growth of 11% per year for SPY. But where things get interesting is when you are in a market downturn. This is how much dividends can actually help you. So let's take a look at what it has looked like since January of 2021. If you had $500,000 in both of these funds, let's say you retired in December of 2020, starting in January of 2021, your $500,000 would have actually increased for SPHD to $584,000 over the course of a year and a half, and SPY would have increased to $528,000. So with that dividend, those large dividend payouts, it looks like SPHD would have outperformed SPY. But if you are retired, I would expect you to be not reinvesting the dividends. This is what we have checked here, not reinvesting dividends. And it looks like you would have been able to pay yourself with $500,000, around $19,000 with SPHD in 2021, and so far this year around $15,000 for SPHD in 2022. So there you have it, SPHD versus SPY with a few different scenarios. So that is it for today's video, SPHD. Let me know what you thought of this video and if you want to see any other ETF analyzed in this way. And if you're interested in playing around with the growth and contribution numbers with any various security, ETF, or stock, and comparing two separate portfolios or two separate securities, go head over to Patreon, and I offer this calculator over there. And with that, thanks for watching.